Hey everyone, Brian Bogner and Greg Towner here, and it's time for our monthly update. We got some exciting things to talk about today, so let's go ahead and get started. So Greg, tell us about your views on the recent stock market movement.
Yeah, what's interesting, Brian, is there's been quite a bit of movement, but if we look at this chart over the last almost 2 years now, we've actually gone almost nowhere. Particularly if you look at that kind of yellowish orange line, that's smaller companies here in the US. It's literally gone nowhere for 2 years now. Now, the purple line is the S&P 500, so the largest companies. That's where the strength has been, and that's up, nicely over the last couple of years. But even still, markets are relatively flat over the last couple of years. That's not necessarily a bad thing. It takes some time to digest. We're actually, liking some of the things we're seeing right now. The Fed is adding liquidity. We're coming on to what is normally a positive seasonal period. Earnings are coming in now. It's still a little early, but the first signs are somewhat positive. So again, market has kind of gone nowhere for a couple of years other than that blip last year, and I think people would be surprised by that.
And not only that, I think it's important to set expectations because what I hear from most people are, well, why would I want to invest when the market's at all-time highs? Why would I want to invest now? Because there just seems to be so much risk in the market. Well, yeah, even though the S&P is at all-time highs, right? Not everything is. And so let's go ahead and just look at a few asset classes here just to help us get some perspective, okay? So this is just year to date, and I've got a bunch of asset classes here. I'll run through here with you. Actually, the best one year to date has been global real estate, and I know you're going to talk a little bit about real estate here in just a minute. Followed by that, of course, is the S&P that we talked about. Large cap stocks have been the growth. There's gold. Gold's actually coming in at number 3 here year to date, followed by the Russell 2000, which are small companies, followed by international developed. Then we have emerging markets down here. Then we've got bonds and then commodities. So if we're really talking about a diversified portfolio, first thing we need to realize is we're probably going to end up somewhere in here, okay? We're not going to be just loaded up on, sure, it would be nice to be a year to date just loaded up here, but as we all know, that changes and these things can move up and down. They do. That's why we preach diversification. So wide range of different asset returns, even here just year to date. So talk to us a little bit about housing.
Yeah, housing is an important aspect of the broader economy. It's something that nearly everybody has some tie-in to. We thought this chart was really interesting. A lot of times people get concerned that there's been too much building or there's just too much, they see it all around them, too many houses being built. But the reality is, if you look at housing starts adjusted for population growth, going back all the way to the 1950s, we actually are still pretty low on the scale. We hear this all the time. There's tight inventory. Home builders are being a little more conservative with how many new homes they're building. So to us, there's not a lot of excess housing starts occurring. There's still room for that to expand before we get too concerned with residential housing. We've talked before, we think housing is getting back to more the local thing. There might be certain markets, San Francisco, bigger markets that have seen kind of bubbles that are suffering now. But for the most part, housing is healthy across the country.
Yeah. And what's another reason for that?
Yeah, another reason for that is the low interest rates. This is a 10-year chart of the 10-year note. We're just a little bit off the lows now. So while housing prices are going up and that makes it more expensive for people, the interest rates are keeping extremely low, making it more affordable, in addition to them having jobs and wages starting to go up. So low rates is a big thing for not only housing, but also how it compares to stock prices. Stock valuations, all else equal, can be higher than normal if the competition in bonds is low.
Yeah. All right. Well,
you're excited about free trades.
Yeah. Well, look, we all love free stuff, don't we?
All right.
So there's been some things in the news here recently. Both the custodians that we use, Charles Schwab and TD Ameritrade, have announced zero commissions. Okay, and this is a game changer. It's a game changer for us because here at Parallel, we actually create models. It used to be where Schwab had its own set of ETFs and funds and things that were free, and then TD had its own set, and so we always had to maintain two different models because we were always trying to, what's the cheapest way that we can invest our clients' money and make sure that they're paying the less amount that they can pay. Well, now sky's the limit. We can build these models out so much more robustly now, and the same model in in this size account, we can actually run in a very much smaller account because we're not paying commissions anymore on these trades. So it's real exciting. Greg and I have been spending a lot of work redoing our models, enhancing them, modifying them. So here over the next few weeks, there's some exciting things coming out that we're going to be looking forward to get rolling out here. So as always, if you, let's sum it up. Yes, stocks are still in a trading range, but we're still in a longer term uptrend. But last 2 years, we've actually been really just moving sideways here, which again, gets us a little bit more bullish about as we look forward. Housing continues to be one of the biggest areas of strength, and free trades for everyone. So some exciting stuff coming out of that. If you have any questions at all, you know where to reach us. Give us a call, shoot us an email, and thanks so much for tuning in. Have a great week.